Hey everyone, Mark here at TapeTally.com for your Week 49 recap. Taking a look at this week's stats, we see that the American markets, except for the Nasdaq, was up, along with the Canadian market as well here. Um, the Nasdaq was down almost 1.5% here based on the relative weakness of Apple shares. As we can see throughout the year, the Nasdaq has outperformed the other indices based on the strength of Apple, and there was almost a 10% decline in Apple this week, so we saw the underperformance this week, so kind of getting back in line. Um, Taking a look at my ratings here, basically for 8 weeks since the beginning of October, I think the week ending of October the 12th, I switched from a more bullish stance to a neutral stance, and as we'll show right away here, um, in essence, that's basically been the correct call so far, and I'll explain why going forward. This is my call here. So let's jump right into the weekly chart. This kind of gives me a broad overview of what's happening in the market, a longer term stance, and if we look at October the 12th here, so that's that candle. This is kind of where I switched my bias, and I noticed that a lot of the breakouts were not following through. When they started following through about in this area here, and probably right about there, and they started failing in this area. So that was the time to get cautious somewhat. Now, so we're maintaining the neutral rating on that one. Let's go to the Qs. Same kind of deal. We underperformed this week based on Apple shares, as I said before, but we maintain the neutral rating here based on this long-term upward channel still being intact. IWM a little bit more volatile, a little bit more unclear here. We did talk about the breakout that happened here, but it since then has come back into that range and a little bit more messy there. So not too much to trade there. Dow Jones Industrial Average stuck in the middle of the range there since the bottom in 2009. Gold, slightly downward sloping channel, and a lot of people say, oh, trading based on trend lines or whatever, or the price of an asset, bouncing off of a trend line or whatever is it sounds ridiculous, and I don't disagree with that fully. However, it works, and as you can see here, the price does travel in trends, as you can see here. If you look at 2009 right to basically, right to the beginning of 2012, so let's say 3.5 years, this market followed a trend line. That is a long trend. You could have basically, when the trend started here, and let's say you got involved middle of 2009 when kind of gold broke out here. Let's say right on this candle here. So this is what's that? Beginning of October of 2009. You get involved in gold. You could have rode that trend out, till the beginning of 2012. Just under 3 full years. Could have just sat in there and it could have appreciated, let's say 50%, 60%. That's quite good. Taking a look at oil, still building that descending triangle. Looks like lower prices are ahead, at least into the end of the year. Whether it finds support here at the $30 level on the USO only time will tell, I guess. EWC is basically being dead money for almost 2 years now. We're basically trapped in this range here. We did see a pop up here, but the prices were rejected here at the $34 level, and we're just back in this range. We're just sitting there. So if you'll notice, like a few weeks ago, I was talking about how the market made. Let's go back to the SPY. This is the daily chart now. I talked about after one of the strong weeks, and many people on the Twitter stream were talking about how this market, they're starting to hedge, they're starting to take positions off or whatever. And when people are saying that, it's probably not going to happen. When the majority of people are saying that, and there was more upward action. So I think that happened here somewhere, and we are higher since then. Although it's been quite volatile and we haven't moved. This whole last week was somewhat choppy. So going into next week, what can we expect? And if we drill down here to let's say a 15 minute time frame, if we take a look at what's sort of forming here, let me just draw a quick line here. So take a look at this kind of this bottom here. Um, it's like an inverse head and shoulders sort of pattern. And then if we can kind of break this, I'm just drawing kind of broad strokes here, but if we can sort of break this upwards, I think at least we've got at least another week, maybe 2 weeks max, where we could see some strong upward movement. But given although the seasonality is positive, we are heading into the major holiday season, so expect the liquidity to be low, volume to be low, and everything like that. Okay, let's take a look at some of the charts from this week. Let me just pull this back to the daily here. Back to the daily, I think it was. Oh no, I want the weekly. And these are the stocks on a weekly time frame that made significant volume this week. So let's take a look. I'm just putting the 30-week moving average here. This kind of gives me an indication of where the market is. I very rarely, for long-term accounts, I'm selling anything that is above its 30-week or buying anything that's below its 30-week moving average. So we can go through this quite fast, and I've already done this exercise before, and I really didn't find too much, although there was one, I believe it was DST. It's got to stick out right away to me. So that's kind of the exercise I've been doing for many years. And I can basically go through a chart depending on how fast the data comes up, and it is coming up fast today. I don't have too much running in the background. So we can see that there are a few, it looks like, shorting opportunities. I'm not as comfortable shorting on a long-term basis. Or short-term basis, I'm not too bad with it, but on a long-term basis, it's kind of tough to catch any sort of big moves, in my opinion. So, for example, let's take a look at this one. We saw a couple of weeks ago strong breaking from a somewhat of a pennant pattern here, breaking up nicely. That's been forming basically since the middle of 2010. Problem with this one is that it's got such a large, although it is kind of blue skies ahead, there we have never seen, or this stock has never seen prices this high. I don't like how big this is. I think there's a better opportunity. I mean, it wouldn't be it wouldn't be against my judgment to take a small position in this, but the stop is at basically $70 and you're at $90. That's $20. You'd have to buy a very small amount of shares there and wait, I think, a long time for that one. Take a look at this one. Keep going down the chart here. I'll stop after a little while here. I think what I wanted to show is, I think, this one, DST. Yeah. Let's give an example of this one. So it's been forming, these rising bottoms for a couple of years now almost, and it finally broke out on larger volume from this ascending triangle, which I like. I don't mind that pattern. You'd probably see some resistance up here at the 85 level, but if you're buying it at 61, so you've got what, about $6-7 of risk. So at least $14 of upside, so that would be 75. So you're right up here. This has got a potential of going even, maybe 3 or 4 to 1. So that's kind of what I'm looking at when I look on the on a weekly time frame. So what can we look forward to next week? I think next week we'll probably see more sideways movement, more talk about the fiscal cliff and everything falling off. Until that gets resolved, I don't think this market makes any significant moves. There'll probably be more choppy trading, and given that we're heading into the holiday season, I don't really see a need to get too aggressively involved with the market for the rest of the year. Anyways, everybody have a great weekend and a great rest of the weekend, I guess, and trade well. Thanks.